Inflation has been ravaging economies for a few months now, and the public is desperate for a solution from the Federal Reserve. Well-known investor Rick Rule gave his 2 cents on the current inflation situation in an interview with Daniela Cambone. Join us in today's video as we dive into this recent interview done by Rick Rule to get a better understanding on inflation and how it may be solved. Federal Reserve officials are hiking interest rates rapidly in an effort to control soaring inflation. However, many analysts believe that the Federal Reserve's approach to combat the escalating inflation is ineffective in achieving the desired outcomes. Rick Rule, a legendary investor and the former president and chief executive officer of investment funds company Sprott US Holdings, is of the opinion that events may not go as anticipated for the Federal Reserve System in the United States. It is his belief that the Biden administration and the Federal Reserve will back down. Rick Rule is of the opinion that interest rates may put an end to inflation if they were to be maintained for an extended period of time, but given the current state of affairs, this wouldn't put an end to inflation until it caused considerable damage to a variety of account balances. Rick Rule has already expressed alarm on the capacity of the economy to deal with significant higher interest rates, and he does so again here. Rick Rule, a well-known stock market analyst, believes that the general stock market will not be able to handle the Fed Chairman Powell's declaration of several rate increases. Rule favors Warren Buffett's suggestion to develop an inflation-resistant portfolio by investing in price makers, i.e., businesses that can readily raise prices without affecting demand. When there is strong inflation that is fast degrading purchasing power, it is possible that keeping a lot of cash on hand is not the best idea. As a result, Rick Rule is of the opinion that the best way to protect one's money is to hoard gold and silver instead of cash. According to Rick Rule, this is due to the fact that gold and silver, in contrast to fiat currency, cannot be brought into existence through simple printing. Consider following in the footsteps of one of the world's most successful investors.
You'll recall, or maybe you won't, you're probably too young, but many of your listeners will recall that when we decided to cure the inflation problem at the end of the 1970s, that the method that we used, which is to say very, very, very high interest rates, real interest rates, worked with regards to the inflation, but they wreaked real havoc with some individual voters, taxpayers, and savers. The recession that was engendered in 1982, 1983, 1984, and part of 1985 was truly one for the record books, with double-digit unemployment, lots of home foreclosures, things like that. That would work, again, if we had the courage to do it. The only thing that I have caution about, and I have a big caution, is that we had more tools available to us then, in the sense that government debt as a percentage of GDP was much, much, much lower. The ability that we have to stick handle the circumstance with federal government debt at 125% of GDP and a much, much, much higher reliance on government with regards to all aspects of the economy than we had then, makes me wonder if we have the tools available to us to combat inflation.
It sounds like you think we don't.
I'm not an economist. I am, in fact, a lender. I'm a credit analyst. To me, a healthy balance sheet and a healthy income statement are prerequisites for a healthy economy. And we have neither. On the one hand, between on-balance sheet and off-balance sheet liabilities at the federal level, we owe each other, that's a polite phrase, about $150 trillion. So the balance sheet's in lousy shape. As for the income statement, rather than having a positive income statement so that we can service the debt, the federal budget is in deficit $2 trillion a year. So rather than working on $150 trillion debt, we're in fact increasing it. So you're right, Daniela. I have a very difficult time seeing an easy way out of this. Now, it does need to be pointed out, in fairness, that we have benefited from 40 years of decent economic growth,
Right.
Low inflation, and very, very, very low interest rates. What's happening now is karma, I guess. We are facing a reckoning that has to do with the fact that with quantitative easing, as an example, we forward shifted demand.
Right.
With excessive liquidity and very low interest rates, we disincented saving and we incented spending. And we got what we paid for. We have a circumstance now where there are excesses throughout the economy, and sadly, somehow, either policy or time, we're going to have to work this out. And I don't know how we get from here to there. I suspect we will get from here to there. We always have in the past. But I do not think it will be pretty. And I don't think it will be pretty in particular for people who forgot to save, people who forgot to invest, or people who forgot to equip themselves with the skill sets that will allow their incomes to keep pace with the inflation. And unfortunately, that's tens of millions of Americans.
You just gave me goosebumps by saying that. Just the importance of just being prepared for moments exactly like this. I want to get back to your point that you made by saying this is 20 years in the making, right? It's not going to go away in 2 weeks. Should this not be the Fed's moment then, Rick, to undo the mess they did when they came out with, this is all transitory, to be more transparent and say, listen, folks, this is going to get really ugly?
I hate to be cynical,
Yeah.
Daniela, but I don't think that being honest is part of the political ethos. People don't want honesty, they want assistance. I would love it if we had a national dialogue that said that we have lived beyond our means for 40 years, and that we have to have 350 million individual resets, and while we're at it, we have to have a national reset. I assure you that if I ran for president on that platform, I would get maybe 10,000 votes and probably 30,000 death threats. The prescription that you offer up is the correct one, and as a consequence, it's highly, highly improbable. People get elected these days, unfortunately, by voicing other people's dissatisfaction efficiently. If you are a Democrat, you get elected by vilifying Republicans. If you're a Republican, you get elected by vilifying Democrats. Nobody gets elected by quoting that great political philosopher, Pogo, who in his comic strip, said, "I have met the enemy, and he is us."
You're absolutely right. You're absolutely right. I never asked you this question, but a few experts in our circle, Rick, that we know, have come out saying that the CPI numbers, they don't even believe the CPI numbers we're being told. I bring this up because we're talking about the notion of truth here. Do you think that the numbers are being manipulated to prevent a confidence crisis?
Yes. I absolutely believe that the CPI stated rate of inflation understates inflation. Now again, I'm not an economist, but I can tell you, Daniela, that wherever those people shop is not, in fact, where I shop. And you'll note, too, that when they discuss core inflation, they leave out in food and fuel. That's okay, but as you can tell, I like to eat, and I do drive. And the idea that my cost of living doesn't include food and fuel, if it's inconvenient, is a very odd thing. The oddest thing for me about the CPI number, which is allegedly a cost of living number, is that it doesn't include tax. Government is the largest expense in most earning households in the country. And the idea that you ignore the increasing bite on your wages and salary and savings that's presented by government is an absurdity. I guess if I didn't have to pay the tax, I might complain less about the index, but that's not on offer. So yes, I think using the CPI number to calculate inflation is a mistake. I use the CPI number myself because I'm too lazy to construct a different number. I don't know how to do it. And because if you use the CPI number, particularly relative to interest rates, the CPI number is high enough that if it doesn't evoke terror, it should.
Right, high enough, but if it were, let's say, if it is being kept down, where do you think it would be? Is it double, triple?
I actually don't know. I know that John Williams from Shadow Stats attempts to calculate inflation based on the calculation parameters that were used in the 1970s. I'm less familiar with his techniques, frankly, because in terms of making investment decisions, sometimes things that aren't true but are widely believed are in the near term more important than things that are true but are in fact intellectual anomalies. Whether the inflation number is 8.6 or 12.6, people need to understand that their savings and their investments are declining in purchasing power fairly rapidly, particularly when juxtaposed to the returns that they're getting on their saving.
Before we move on from inflation, I think there's an important life lesson that can be brought up here, and I know you and I have had multiple conversations on the sidelines of conferences on this, and I always really appreciate your insights. So when you talk about the importance of savings, especially for moments like this, right? After we've had such an incredible party, as you say, how do you find a balance of, okay, I've made a comfortable living, I want to enjoy life, but remembering that, stop looking at savings as boring, but as, a lifeline, as being vital. How do you find that balance?
Well, I went overboard when I was younger. On the other side, I consistently saved, 35 or 40% of pre-tax income, which meant that after tax, I spent very, very, very little. The consequence of that is that although saving is an ingrained habit, any saving I do now is sort of silly from an economic point of view. But I suspect that the old financial advice about saving 10% of every paycheck, pre-tax, no matter what, so-called paying yourself first, before you have a Starbucks, before you buy a new pair of shoes, before you do anything, that you pay yourself first, that you take 10% out of the paycheck, you take 10% out of the interest receivable from your savings, everything. 10% of gross income pre-tax should be saved. And I think if people were able to do that, from a financial point of view, if they invested the proceeds reasonably prudently, that over 40 or 45 years they'd come out okay. The second form of savings, Daniela, doesn't get the attention it should, which is to say investing in yourself, developing your personal brand, developing your skill sets, learning how to or further a product or service that is in demand, that generates enough utility for people that you will be needed in any economic circumstance.
What did you guys think of Rick Rule's point of view? What actions should the Federal Reserve take to tame inflation and preserve the U.S. economy? Share your insights in the comment section down below. If you enjoyed this video, please like and subscribe, and we'll see you on the next one.